So this is weekly commentary 63. So if we start on the weekly time frame, so we're still working towards this, sell side liquidity pool. Now we've seen a previous week's high sweep of this candle and this candle. Now if we go to the daily, right, I'm still favoring bearishness on the dollar, and you'll see the reasons why. So this week, right, we had a accumulation. We ran, right. So remember from the last weekly commentary, we're working in this range, high to low, right? We manipulated above into the premium of the range, right? Displays lower, left the fair value gap. Institutional order flow entry drill. That's an institutional order flow entry drill. You see how we ran stops, displays lower, and that fair value gap. Do you see that next candle? How it just trades into the fair value gap and moves away. I expect the next candles to do what? Open, high, low, close, right? I'm favoring the run on, of course, first the previous week's low, and then I want to see the run onto ultimately this low, and then work our ways down into this low, right? I want to see us get to the 50% of this, fair value gap from here to here. Now, pound, right? We're still working towards this monthly fair value gap, so I'll still favor only longs on GBP USD and Euro USD. You see how we're kind of, getting pretty close to it. We have a lot of sell side liquidity being built up, right? When we're inside this higher time frame PD array, right? Now, when you're working inside monthly PD arrays, this is, you know, the environment where you find your daily market structure shifts. Remember, your daily market structure shifts, like how your 15-minute market structure shifts need a 4 hour or daily context. Your daily market structure shifts, they need like a monthly or a weekly context, right? Usually the daily market structure shifts are, economically driven. So if we look at the economic calendar, Monday, bank holiday for the new king. Tuesday is, quite mild. It doesn't mean that Tuesday is not favorable. It's just less manipulated, right? Tuesday is definitely fine to trade, right? Wednesday, Thursday, and Friday. So what type of weekly profile can you expect? Where is the bulk of the expansion for that weekly candle resting in, right? Clearly, it's going to be the mid to the end week because you have the CPI, right? And this one you leave, right? Don't trade until CPI moves, right? So Monday, Tuesday, you can, right? Usually, Monday we like to leave to, see what the likely weekly profile is going to be. Tuesday's fine. Wednesday, leave it until CPI, right? So you have the London close kill zone to work in, and the latter half of, New York open kill zone. Thursday, I'd be careful of, trading around this time. I'd wait for all of this to pass, right? I wouldn't even trade the start of the New York session. There's just too much manipulation going on here. And Friday, we have this consumer sentiment as well, right? London close kill zone will probably offer in the day of Friday. If we go to the S&P, right? The S&P, it's got above, kind of above these highs. You see how we've got that bodied candle through these highs. I just want to monitor it. I want to still see that kick, right, above, these equal highs. You see now this support and resistance retail methodology, they'll have this as a big, resistance level in price. I want to see an energetic kick above this entire level, you know, these relative equal highs from this high and this high, right? And just, trade back into this volume imbalance here. For the US 10-year, we have, again, still consolidated. We didn't take out this low, right? So we're still in a consolidation. I'd leave this. This is what's causing the DXY to chop, right? If we just zoom out and we compare. So this is April and May. Now let's look at April and May here, right? This was April and May of, last year. You see the difference in the size of the daily candles, the daily range. This has been held in consolidation. Why? Because the bond market is being, held in a sideways move. When that happens, we get very high resistant moves in the dollar, right? We need this market to move in line with the dollar for the DXY to have low resistance liquidity runs. When there is a crack in correlation between the intermarket, analysis, essentially correlated asset classes like the yield market and the DXY, you're gonna get, it's like if you think of, cogs grinding against each other, there's resistance between them, right? You need them to move in the same way. You need them to move in their natural correlation for there to be low resistance runs, right? For example, if you see this market, expand to the upside, the DXY will have a very easy time to run buy side liquidity and run through premium PD rates, setting up the opposite for, clean Euro USD low resistance liquidity runs, right? Look at when the DXY and the US 10-year run together. You get very, very easy liquidity runs to the highs and to the lows, and then of course the inverse for euro and for pound, right? Now, you know, because of the weekly reports, now we don't have to go through what happened in the week. There's a trade breakdown video I want to make for you guys after this weekly commentary, but just to tie up, the prediction for this week, I want to see us trade underneath the sell side liquidity pool. Now, when we get underneath, these levels, right, there is a lot of buy side liquidity being made inside of this, right? I'm gearing towards a likely power of three happening, right? Accumulation. I know we manipulated here, but I want to see like a clear displacement lower, and then I want to see if we can get back above this level and possibly reverse for the remainder of the year. One thing I want to show you guys is this indicator that we now have access to. This is a higher time frame fractals. You can't find this on the indicator section. If you search it, it's a private indicator that someone I spoke to made for us. Essentially what it does is this, right? And this is it's a very cool indicator. So it shows the last 10 bars, 1, 2, 3, 4, 5, 6, yeah, 10 bars. And what it does is this. It eliminates the need of having a multi-screen setup, because I know a lot of people in the mentorship that they don't have the luxury of having a multi-screen setup. And if you split your screen using this, it's not easy on the eyes. I prefer not to have that as well. But having this all the time on your chart is very useful, right? So for example, let's say we had this up on the 5 minute. Let's say in real time we had this up in the 5 minute, and you see this fair value gap, right, which is the distance between this candle's high and this candle's low. We would see this on this fractal, this indicator, right? We would see price trade up into it. Now, when you see that wicking away, right, from a high time frame PD array, as you're on your 5 minute chart and you can, start to see is your entry mode, forming within these PD arrays, then you can see and start to entertain price instead of flicking through the time frames. It kind of eases pressure off the trader. It's just a tool. It's not gonna tell you to buy and sell. It's literally just a tool for us to, aid in our analysis, making it a bit easier for us. For example, let's say Monday's candle opens, right? And we don't expect the high of this candle to get, taken out. We can see the daily candle trade up high, and this moves as, the daily candle prints. It doesn't just, print when the candle finishes, it prints in real time. It still has a bit of tweaking to do before I want to release it to you guys, perhaps by the next weekly commentary or middle of this week, hopefully. So let's say the next candle opens and it trades, here, around, 50% of this daily range, so around here. And then you see, it starts to wick away on the daily. And as you're on the 5 minute, you're seeing, that translates to a 5 minute market structure shift. Then you can know that on the daily, expansion is likely to begin, and you can then entertain it. For the New York open kill zone traders and the London closed kill zone traders like myself, when you get to your chart and you see that this candle has clearly manipulated in one direction, and you're getting close to the, you're starting to reverse, clearly wick away the other area, you can, know if to hunt either continuation for New York, or, if this is still trading one way into a clear PD array, you can hunt a New York reversal. And the benefit of this is this as well. We can change the time frame selection, right? So I can change this to a 4 hour, right? And this will show the 4 hour time frame instead. If you want to swing trade like myself sometimes, I can change this into the weekly time frame. And then here, see, it shows the weekly time frame instead. So, there's quite a few uses, for this indicator. I have a few more indicators like this that I want to use, but they're not going to tell you to buy or sell. It's literally just to ease the process of your checklist or your criteria to enter a trade. I think it's a very handy and neat indicator to have. So when I get this, I'll find a way to share it with you guys privately. Um, I'd hope that you keep it within the walls of the mentorship and, you know, not share it publicly with people. But yeah, so that's going to be it for this weekly commentary. Just to wrap it up, if we go back to the daily, I'm watching from this institutional order flow entry draw. I want to see the candles, open, high, low, close, deliver into this sell side liquidity pool. By Wednesday, CPI, the given Sunday's opening price where we open up on Sunday, it should be quite clear what the weekly profile is. For example, Monday, Tuesday, if you read the weekly report, clear manipulation coming back down towards Sunday's opening price, Wednesday, and then you can hunt continuations Thursday. I'm only sieving out short DXYs. If we get an up candle, it's likely that short DXY trades won't be offered. You have to just, you know, commit to one side. Even if you see the other side, it's about holding down your emotion, right? Understand the direction, the only one direction you're favoring, and find stages and entries in that direction, right? So that's going to be it for this weekly commentary. And until the next time, and I'll catch you guys in the next one.